welcome. You are watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Remember, the Nifty has posted its fifth positive F&O series in the last 6 months yesterday. And despite the lackluster second half, the September series has also managed to add about 7 lakh crore rupees to the overall market cap of the BSE listed companies. Now, will the Nifty also get into an October fest in the new series? That's what we will find out. But first up, the top headlines we're tracking for you this hour. Indian shares are likely to be on the back foot on the first day of October's F&O expiry as overseas cues remain tepid. A truncated week will also prevent the bulls from gaining ground. October is likely to be tough for Indian equities as global macro deteriorates and a risk of trade across the world impacts sentiments on Dalal Street. A 5-month rally on Indian markets has also made valuations expensive. Extreme caution advised on the long side. Very good morning to all our viewers and good morning to you, Shail. The last trading session of this week and the first session of October F&O series. We've seen so far the Nifty is down about 0.8% in the week and the last week's drop of about 2% brings it down 700 points from its all-time highs of 20,222. But Shail, I want to understand from you, there are a lot of divergent views when it comes to the Nifty now going forward from here. Some analysts are saying it will be back at 20,000. Some of them are saying no, there is going to be more downside coming in. What's going to be the actual picture?
Good morning, Sakshi, and hello and welcome to all of our wonderful viewers who've joined us from different parts of the world to watch this first day of October's monthly F&O expiry that starts on Friday. Sakshi, markets are made of contrary views. Unless I buy, you can't sell, and unless you sell, I can't buy. So for those people who think Nifty will go up, well, it's an opportunity to buy the 50 DMA, and for those who think that Nifty is likely to go down, well, you can sell at the 50 DMA. But let's just depend on data because in data lies God, and you can have an opinion, but data is absolutely correct. So I'll give you some of the statistics which I feel will impact Nifty in the coming week at least. One, we have a holiday on Monday because of Gandhi Jayanti. So options premium will be squeezed over 4 days instead of 5. That has to be kept in mind. A truncated week ahead as also a Friday today will keep the bulls on a back foot. So that has to be kept in mind. Yesterday's sell-off was phenomenal. I normally don't look at the FII numbers, but at 3,324 crores, this was the highest single day sell since February of 28th. It also means that September has seen net FII sales of about 20,000 crore rupees. And why has that happened? Because global macro has deteriorated for equities. There is a risk of trade that has happened, and the Nifty gave the second hint to you yesterday when it fell almost to its day's low and almost crashed. So my understanding is that the trend is weak and we are going to start October on a back foot simply because we've had a huge rally from April onwards. Not only on the Nifty, which is up about 7.5%, but also on mid caps and small caps. The mid cap index, I'm sure our PCR will fire in front of you, is up something like 27% from April. The small cap index is up 35%. So actually these are very huge outperformances, and they will revert to the mean. Yesterday we had Abhay Agarwal from Piper Serica talking to us. He said he's booked nearly half his mid-cap portfolio and is into cash. So sensible people are moving into cash, and the fact that we'll post a second weekly loss on a row in Nifty because of last week's fall, and of course, as you very rightly mentioned, 0.8%. So my own understanding is that it's very, very difficult to have a long trade on the Nifty. Even the GIFT Nifty is pointing to a gap down. Let's see how it works. And the fact that 10-year US yield is highest since October 2007. Crude oil prices are above $90 a barrel, and of course the dollar is showing strength, 10-month high. So I would imagine that if we are not going short, then at least don't be long. So that's the strategy as far as Nifty is concerned. And the option chain has shifted lower on the Nifty. 19,500 and 19,400 are the fresh supports, and of course the resistance has moved lower, which is 19,700, Sakshi.
Okay, then on the Nifty Bank, Shail, this index also saw its lowest close since September 1st. The Nifty Bank has also now declined over 2,000 points in just 8 trading sessions from the highs of 46,310 that it had made on September 15. We've been incrementally seeing more names getting added to the HDFC Bank list. It was a ICICI Bank first, and now it's Kotak Mahindra Bank as well. That's joined in the laggards list in yesterday's trading session as well. Your own thoughts on where is the Nifty Bank really headed, and why is support really not coming in from some of these big names?
Sakshi, I looked at the Nifty's advanced decline yesterday. It's somewhere like 5:45, which basically means that only 5 shares rose and 45 fell. In the FNO space, that is 2:48. It's very, very weak on Nifty, and Bank Nifty it was 0.12. Out of 12 stocks, 12 of 12 lost. So all I'm trying to say is that there is a risk of trade globally on equities because of deteriorating global macro, and if you have higher inflation, higher treasury yields, rising crude oil prices, the first index that will react negatively will be the Bank Nifty, and we are seeing that happening exactly in front of us. The trend is very bearish. All private sector banks, the frontline ones, HDFC Bank, ICICI Bank, Kotak Bank are showing signs of stress on charts, also on options chains. The call ratio is shifting lower. All ITM calls are showing selling pressure and bearish pressure, and that's mainly because you see these were the stocks which the foreign investors had bought, and these are the ones where the selling pressure is coming. Bajaj Twins, HDFC Bank, ICICI Bank, the best money was made there, and that money is being now taken back away to US shows. So Bank Nifty is likely to be weaker still. The immediate support is now shifting lower and lower. 44,300, 44,200. Actually on the options chart, 43,500 has also opened up. So that's what I'm trying to tell you, that the range is shifting lower because the global macro has deteriorated, and the fact that you have a huge gain and profit needs to be booked. Profit needs to move from the book to the bank, and that is what is happening. Easy money has been made on PSU banks. Now extreme caution is advised on the long side. You have to be very, very careful if you're on the long.
Okay, extreme caution advised there. But in the FNO space, are there any stocks that one should keep on their radar today?
No, Sakshi. For the first time, I am not offering any trades based on technicals or how should I say, options data. Let's skip for today. Today is Friday, and sort of let's take it easy. The first tick will tell you that there is no trade on the long side. So I just desisted from my end. You tell me what's happening in the US.
Well, the benchmark indices, Shail, on Wall Street, they ended mostly higher, right ahead of the personal consumption price index releasing today, and that will be something that investors will be watching out for. The Dow Jones ended about 0.35% higher in trade. The S&P 500 added about 0.6% as well. The Nasdaq also managed to end about 0.8% higher in trade as well. So slight recovery happening from the last 2 days of tepid sales that we had seen. Markets in the Asia Pacific have opened mostly higher on the final trading day of the week and the month, mirroring the overnight moves we have seen on the Wall Street. Stocks in Asia also looked set to post their biggest quarterly decline in a year, while oil rally really faltered and also the treasury yields fell, supporting the sentiments a little bit and easing the nervousness on that front as well. Rightly pointed out by you, it's the overseas investors that have remained the net sellers of the Indian equity markets. 8 consecutive session when they have been selling off, and yesterday was one of the highest sell-off that we had seen, 3364 odd crore rupees. DIIs managed to mop up about 2711 crore rupees worth of funds, so that was slight support coming in. But FIIs, when we talk about the entire year so far, 2023, about 1,20,000 crore rupees have been poured in, but in this month itself we've seen about 22,000 crore rupees worth of sell-off happening right there. Okay, let's welcome our guest then, Shail, on the show. We have Vaishali Parekh. She is the head of technical research at Prabhudas Leeladhar Research. Very good morning to you, Vaishali, and thank you so much for taking the time out for this discussion. Let me begin by understanding your own view on the Nifty. First day of the October FNO expiry, where do you see the Nifty heading?
Very good morning to all of you. Thanks for having me on the show. Yes, so market has been showing a lot of tension. In yesterday's candle was a bit scary. So, well, I would say that we did manage to close at around 19,550 levels. But, we are now seeing that in all likelihood, we can go down towards 19,400. 350 level. So let's wait and watch. Today's the first day, but the bias is corrective and a cautious move is recommended at this level because, yes, yesterday's candle is showing weakness.
Good morning, Vaishali, and what a pleasure to have you with us. I think after a gap of 1.5 months, how have you been? 1, 2, how do you see the charts of at least the Bank Nifty? And any 2 top picks that you can share with us for today's trade?
Good to see very you. Good morning. Yes, thank you for saying that. And yes, I have been doing well. It's just that the timings didn't match. I mean, I was asked, but I'm happy to be back here. And yes, for today, I would say, I'm focusing more on Midcap because that would be still comparatively a safe bet. Yesterday, we saw in CSB Bank. It was holding on in spite of all the choppiness that the market was showing us. CSB Bank has shown good volume and it is holding on very well. So we closed at 340. So I would say with a stop loss of 320, one can buy the stock for a target of 360 to 370. The other stock which I really liked was Nykaa. During the latter part of the day yesterday, we saw good volume picking up and risk-reward ratio also looks to be quite favorable. So with a stop loss of 145, I think this is ready for a target of 165 and 170. Now, as far as Bank Nifty is concerned, if you ask me, well, we are seeing some profit booking coming in, but yet we need to wait for Bank Nifty to break 43,800 levels decisively to see a downside. So right now, I would still say it is just consolidation with some corrective move. And once we see this Bank Nifty moving past 45,000 levels, then we can say that there is some up move that can be expected in Bank Nifty.
Right. Soumya, I'm really interested in knowing your view, the longer term view on CSB Bank. For 2 reasons. One, I think the all-time high for this counter is fairly near. But given the overall negativity that you see creeping in into the large private sector banks, how do you think the smaller private sector, especially the south-based banks, will fare? Look at Federal, record high. CSB headed there. Tamil Nadu Mercantile Bank, record high. But Frontline in real pain. HDFC, ICICI, SBI. So why is there a dichotomy?
Vaishali,
this was for you.
Yeah.
Oh, sorry. Yeah, so I think we just spoke about CSB and likewise even Federal Bank. So I think maybe they are expecting good numbers to come in right now. Federal Bank also all-time high, and we are seeing that yes, the trend is very much intact. But as far as the front line, as we are talking, Kotak Bank, we thought technically it was very well placed, but yesterday that was a disappointment. Likewise, even HDFC Bank is not participating. PSU sector has done its bit. So now few chosen banks which have yet to show some participation. So I think you rightly said that yes, CSB Bank is doing well. So also is the case with Federal Bank. So I would say I would still hold on to Federal Bank because above 150 technically, if it closes and sustains, I would be looking at a target of 160, 165. So, well, fundamental reasons it's hard to tell, but chartically, I can say that these are the stocks with a favorable bias.
Okay. Vaishali, good morning to you again. And let me just get your views on some of the specific stocks that are in news as well. Imami, for example, is in news today. It's going to be foraying into the juice category with the acquisition of 26% of shareholding in Axiom Ayurveda, which owns the brand Aloe Fruit. Your thoughts on the FMCG space, because it has been an underperforming one. But in the last week or so, we've seen slight bounce coming in on some of the stocks like a Nestle or a Britannia, HUL. Your thoughts on Imami now? Yesterday, we saw the stock just about 1.1% higher in trade. Is there any trade that one should look out for in the FMCG space?
No, I would say yes, Imami. I mean, technically, it has given a good round of momentum, and right now it has retraced. So currently, we are seeing it is taking support at around 500 levels. So if 500 support level is held on, one can see a bounce back coming in at least till the level of 540, 545. So if we move past a bit above that, there would be a renewed target. But yes, for now, I think it's a good bet to buy this stock. And as far as FMCG is concerned, I think, well, I thought it would do well, but yesterday's move was a bit scary. So let's wait and watch for the counter on the whole.
Okay, got that. Vaishali, another space that is on the top of radar of the brokerage houses today is the cement space. Macquarie has come out with its several reports on several counters from the cement pack. For example, they have raised the target price on ACC with 21.28 kind of target price. Ramco Cement, again, they've raised the target price to 9.55. Again, Dalmia Bharat, they've raised the price to 26.58. But on Ambuja and Shree Cement, they have cut the target price. On Ambuja, it's cut to 480. And on Shree Cement down to 25,149. How are you looking at the cement space? Is there any momentum that you spot on the charts? Any particular stock that you'd like to suggest here to investors?
So in fact, actually, I'm tracking. I would start with Ultratech Cement, but chartically, it is not yet supporting my view. Maybe we can just see because they are all below the moving averages. Yesterday, we saw a good corrective move. So even if Ultratech Cement I were to choose, it needs to move past 8,300 levels. So unless and until we see some clarity as far as the movement is concerned, I think ACC is technically well placed. Ambuja is showing some selling pressure. Ultratech is showing some selling pressure. Likewise, even Ramco is not even showing some strength right now. Ramco, I would say that yes, it needs to compared to other stocks, Ramco is well placed. So taking 880 as support, Ramco could do well, but the other stocks are not very convincing right now. Cement pack on the whole, it could be stock specific. So for now, ACC and Ramco Cement look positive.
Okay.
Right. Vaishali, how are you looking at the rally in the mid cap and the small cap? Our PCR will fire the daily chart of the mid cap index and the small cap index. Given the troubling macro that we see globally, what are you advising your clients to do as far as longs are concerned and as far as protecting existing profit is on mid caps and small caps?
Well, I would definitely stay cautious now because I'm seeing that the market is witnessing some exhaustion. A sporadic move or stock specific movement cannot be ruled out. But overall, you see the index. I mean, now if we expect too much, we are trying to be greedy and we are not acting wise. I would definitely say, and I would also want to do the same, at least sit on cash partially because I think market is witnessing some exhaustion.
All right.
Where do you see the maximum overvaluation on charts? I mean, the maximum levels which are overstressed. Which are the sectors that you would be extremely cautious on?
So, well, right now I feel it could be time to book profit in auto sector also, because that still has scope. I mean, has been outperforming. So I
Okay.
think it should one should book profit. Now, yesterday I was seeing Trent. Trent had shown so much of a robust move, and yesterday we saw that the stock was witnessing some corrective move. So stock specific trend, I would say that yes, one should book profit. Even defense stocks, like I mean, they are showing some support and all, but I don't see a runaway rally coming in defense or rail stocks and all. I would say that stocks which have sectors which have already shown so much of run up, profit booking should be
Okay.
the.
Vaishali, you talked about booking profits on autos, and Maruti, where a few days back we were seeing record high levels, brokerage houses coming out with their targets of 12,000, 12,400 odd. Today, CLSA has come out with a sell rating on the company and has a target of 9417. Your thoughts on Maruti?
So Maruti, my view was bullish as long as 10,300 levels is held on. So I had recommended a buy for a target of 10,800 to 11,000 levels. And we are seeing that it's witnessing, I mean, it's hovering around at these levels at all. So if we see a break of 10,300, it confirms a downslide, because I'm seeing the RSI also on the daily chart and all. We are seeing some exhaustion. So once 10,300 levels are broken, I would match the view of a sell.
Okay. Right.
Vaishali, as a long-term observer of the market, what do you make out of the sales number of 3,300 crore rupees by FIIs yesterday, the largest since Feb 23rd, Feb 28th?
So there is definitely some panic. I mean, we've been seeing some selling, but of course we have the domestic inflow coming in. So that is how we are seeing some stock specific movement and market holding on somehow. But if you see individually now, if you see paint stocks to start with, I mean, the reality with crude going high and the paint stocks falling down, even the OMC is not working. I mean, it's just been a stock specific right now. We are seeing like power stocks, power sector stocks, they are still holding on well and all. But otherwise, I think overall market is witnessing exhaustion. You see, even the IT pack, we were doing so well in the IT and it was considered to be a safe haven. Even Pharma pack was considered to be a safe haven. But from yesterday's move, the type of selling that we saw, it's a cause of concern. One should not be sitting pretty that yes, it's just a regular bounce, because market has given us a good run up and now we are in the overbought zone. So, well, anytime, it's a matter of time that. So, if 19,400 levels break, I would be very, very cautious.
I'm glad, Vaishali, that you pointed out on the IT names, because IT stocks will also be in focus today, because Accenture has come out with its expectations of the earnings and the guidance on the IT front as well. It expects the revenue growth to be in the range of 2 to 5% in local currency. It's expecting a 4% in the dollar revenues as well. On the operating margins, again, a slip. It is expecting about 12% odd from last 14.7% year on year. It is forecast a muted FY24 guidance as the tough economy weighs in as well. In fact, Nomura has also maintained a cautious stance on the IT sector on the weak demand trend. And the other factor is that, on a sentimental, knee-jerk basis, we are seeing some reactions come in on the GST notices also being sent to the IT companies like Infosys and Coforge yesterday. How would you really advise investors to go about IT space, the large caps vis-a-vis the mid caps? Because the mid caps is where the maximum action was in the last 1 month or so. We'd seen a stock, we've seen a lot of stocks run up sharply. Coforge, we saw Birla Soft, Persistent Systems, LTTMS, all of these stocks are really going through the roof really in the last 1 month. How would you advise both of these segments?
So first of all, let's talk about IT index on the whole. See, it has been in a trend. Yesterday's one candle should not be the deciding factor. We are still in an upward trend. So if we break the long-term trend line of 31,500 levels and we close below that, that is the confirmation that yes, IT stocks are going to witness further corrective move. So, well, persistent and like you said, LTTS, Coforge, the technical targets were already met with. In fact, now I would still be looking at LTIM, even Infosys. But if 31,500 levels break, I would put IT to buy on hold.
Correct. Sakshi, I think the pre-open rates will be with us in a couple of seconds. Yes, they are. And let's not discuss the first tick on the Nifty. This is unlikely to hold. But let me tell you what the market is up to. Okay, LNT, the lone gainer on the Nifty yesterday in the futures and options segment is up 3.2% at 31.10. HDFC Bank is flat 15.26. Lever is down 0.6%, 24.45. What else? Reliance is up 1% at 23.60. These are rates that will settle down fairly, on the side track. L&T is actually showing 10% higher at 33.11. That's not what's likely to happen. Let's pay a little more attention to the FNO space, which is not in the index heavyweight segment. Let's look at Maruti. Sakshi was pointing out to a research report that's come in, and the fact that Vaishali wants profits to be booked there as well. About 3% lower, 10,186. These are, let's not show you these trades because they in any case will settle or much lower. At the moment, these are initial sparks that come in. They have no relation to reality. Coming back to Vaishali. Vaishali, obviously profit will be booked on mid caps and small caps. And market is a place where sectoral rotation happens. Sectors that are down in the dumps come back into the focus. Should a lot of money move from mid caps, small caps, which sector do you think this money flow is likely to come in?
I think FMCG counter is now shown good corrective move, and all the worst of crude rise and all. I think it's factored in all the prices. So I would look at ITC, I would look at HUL from here on, and I think this, as far as sector is concerned, we would be seeing fair value at these stocks. But most of the other sectors are already run up, so hard to tell.
Okay. Vaishali?
Yes, I agree. I agree with you. Sakshi, if you look at the long-term chart of Hindustan Unilever, I think that's the only one in the top 10, 11 stocks as far as weights are concerned, which is below 200 DMA. So that is likely to attract some money coming in. And of course, ITC has corrected 10-12% from its all-time high of about 500 to 452. So these two stocks are definitely in the buy zone. Let's see what happens. What have you observed, Sakshi?
Well, Shail, I wanted to take Vaishali's view on some of these small finance names, which we have been revisiting again and again. Stocks like Manappuram Finance, Chola Finance. We've also seen some movement in the FNO space yesterday on Cholamandalam Investment as well. News flow over there. Any particular microfinance, small finance names that you'd like to highlight? Ujjivan Small Finance was also, outperforming yesterday and day before. Your own thoughts, Vaishali?
So I agree with you, Sakshi, for Chola investment, because that was one stock which we had also recommended to our clients yesterday as a momentum trade. So seeing the trend and seeing the volume and the chart yesterday, I think this stock is poised for a target of say 1270, because I think it closed lower, not at 1246. I think it has closed lower at around, oh, you're right, closed at 1220. So I think this is one stock that I would really have a look at for a target of 1270. That would be a trading strategy. And likewise, even Manappuram. So Manappuram, I do like this stock for a target of around, say, 160 in times to come. And I would also look at L&T Finance and Mahindra Finance. So if market were to stabilize at these levels, I would definitely look at L&T Finance and Manappuram Finance. I mean, Mahindra and Mahindra Finance. But Ujjivan and all, I think they've already run up. So nothing fresh on the radar.
Vaishali, I'd like to take your view on L&T. It's a massive rally that's unfolding on this bluest of the blue stocks that we see. Of course, the buyback was announced fairly well. The order flow is very strong and consistent. What are the longer term charts of L&T telling you? It's been a quiet overachiever, and somehow it does not get the due respect that it should from both fundamental and technical analysts. What's your view on L&T?
Well, so this is one of the strongest stocks as far as the capital sector is concerned. And I think it is moving in its own accord, and it's a must have in your portfolio. I would not take such a stock as a trading strategy. But yes, technically 3,300 was the target resistance. And we saw that right from the time the stock started moving from 2,800 levels as the support. So, well, even the long term, I mean, I would say there can be in between whipsaws because it's already in an overbought zone as far as the weekly, the monthly is concerned. But such stocks are buy at every decline and a must have in the portfolio because these are all safe bets, not erratic, and will give you gradual profits.
One stock, Vaishali, that I wanted to take your view is from the telecom space, and that's Bharti Airtel. The stock was among the top gainers yesterday, and we did see the subscriber additions coming in. In fact, it's nearing its all-time high levels. It's about 931 odd levels. Again, in the pre-open trade, about a % move is what I can spot, and 948 it is its 52-week high level. Your thoughts on this stock now?
I think stock is doing good. It is in an uptrend, and I think I would say that 890 is the support. And in all likelihood, the stock is going to move past the previous high, and probably we would be heading towards 1020.
Sakshi, we'll now pay some attention to pre-open trades. It's already 907, and let's see how they settle. Okay. Hoping against hope, the Nifty is in green, up 58 points higher, 19,580. Remember, today is also the last trading session of September, as also the end of the first half of the calendar year. So a lot of mutual funds will also want to post some of the finest net asset values for the end of the quarter, the end of the month, and of course the end of the first half of the current financial year. Therefore, you just might see some green tick across the market because massaging of NAVs will happen. Be that as it may, this is how the pre-open looks like. 144 points up on the Bank Nifty, 44445, and 58 points higher on the Nifty, 19,580. Now let's look at the stocks that are contributing to this. A wonder of wonders, all 10 index heavyweights are in the green. So a gap up, and let's see how this gap up continues. Remember, it's a sell on a rally market. So let's see how traders look at this market, and let's see how large institutional players look at this dip. L&T 1% higher, 3040, fresh record high. This is the only one stock that I devote my full screen to. Kotak 0.5% higher, 1744. Let's look at HDFC Bank, flat 1523. Let's look at Reliance, 0.3% higher, 2341. Lever in the green, 2465, 0.2% higher. This is a stock of interest. ITC 442, 0.2% higher. Money is likely to move into FMCG. Let's look at how the trend works out. Now coming to F&O stocks, and let's look at the gainers here. Oro Pharma 4% higher, 910. Hindalco 2.4% higher, 478. Chola Fin, a stock that Sakshi pointed out, 1245, 2% higher. Federal in the green, 2% higher. Sale in the green, 1.3% higher. Okay, seems like a metals day. Tata Steel, Hind Copper are also trading in the green. Let's look at NSE 500 and the top gainers here. Okay, Oro we've talked about. Imami, a stock that Sakshi pointed out, 2.4% higher, 525. The rest is about what we see. All of high beta is doing well. PFC, SAIL, RB Bank, SGVN, BHEL. So these are the stocks that are showing traction on the green side. Vaishali, coming back to you, would you like to discuss the long-term prospects of BHEL on your charts?
Well, BHEL is on the radar for many of us. We've been seeing even yesterday there was good volume. The trend is intact, and I think it is a good buying opportunity at this level. 118 should be the near-term support level, and I would be looking at a target of short-term target would be 135. And if it moves above 135, I would be ready for a target of 145 to 150 levels. So this stock is definitely worth a consideration.
Vaishali, I wanted to take your view on UPL. It's showing some upticks right here, about a 1.5% higher in trade. Also, HSBC has come out with a buy rating on the company with a target price of 775 right now. Is there a trade here?
So for now, if I'm seeing, I think in the chemical sector, this was the most beaten stock. And right now, as far as the charts are concerned, it's in the process of making higher bottom formation. And so now I would look at it in a way whereby 595 should act as a support. That should be the higher bottom. And well, right now, a trading strategy of 640 can be made out. And once 640 is crossed, we would be looking at a target of 680 and higher. So that is how I would make a trade.
Okay. Right. Oro Pharma, Vaishali, could you have a look at it from the Nifty 500 basket, 4% higher in trade at 910. Last week we had Mayuresh and he'll be joining us very shortly. He picked out this stock as his top choice in the pharma space as well. We'll wait for him to join as well. But Vaishali, could you look at this stock at 910? What would you suggest investors to do?
I would say continue holding with today's lowest stop loss because this stock is ready. I'm now seeing the weekly chart. It is showing a lot of strength. And of course, I think this stock is ready to go towards 1040.
And Sakshi 1040 would be the all-time high for this counter. Remember, very, very high beta counter and is often buffeted by news that you don't want to hear. I mean, looking at corporate governance, looking at a lot of other things, one really wonders how long-term shareholders of Aurobindo Pharma survive, be that as it may. But technical charts look at a fairly strong uptrend, and that's what Vaishali very correctly pointed out. Okay, we are still 3 minutes away from the market to open. And Vaishali is with us. She's spoken on a number of stocks. Let's look at another one which is doing fairly well in the auto space. Mahindra and Mahindra. Your view there on this stock, one of the top outperformers on a year-to-date basis in the auto index. Vaishali.
So I would say right now it's just showing some consolidation. But well, 1550, 1540 should act as the support. And the consolidation would, the stock could be out of consolidation if we see a move above 1620. So right now I would observe a range of 1540 to 1620. Either side move would bring us a clarity of the next round of momentum.
Okay. All right. Another stock, Vaishali, I wanted your view on is Coal India. From the PSE basket, again, we are seeing some momentum build up right here. About a percent higher in trade right now at 292 odd levels. And in fact, this stock has been in momentum. Last 5 days, we've seen a 4% move. Last 6 months, it's been a 38% move. It's trading at, year-to-date highs, 1-year highs, even multi-year highs of almost 5-year highs as well. Your thoughts on Coal India right now?
So it is definitely in a very overbought zone, and it is, of course, as you rightly said, all-time high. But I would say there is still some steam left. Continue holding with a trailing stop loss, and I think the stock is ready for a target of 300, 305. to start with. So it would be a small trade for me right now. Not much would I expect because quite overbought and quite run up. But yes, there is still some upward bias which is seen right now.
Okay.
Fair point. Sakshi, 9:14 in front of us, and the opening trades will be soon looking at us. 2 points I want to mention. It will be a gap up of 57. Let's see how traders react. My feeling is that this gap up will be sold into. The global macro is not conducive to a trade on the long side, and of course, it being a truncated week. Monday is a holiday, so option premia will get scrunched in 4 days instead of 5 on the weekly side. Okay, ladies and gentlemen, we have the first tick, 68 points higher, 19,590 on the Nifty, wonderful, a green tick, and 142 points higher on the Nifty Bank, 44443. Let's look at how the trades are settling in the initial part of the day. Okay, L&T taking it away, 1% higher, 3042, fresh record high there. Kotak, 0.5% higher, 1713. What is Reliance doing? 0.5% higher, 2345. This is positive news for the Nifty. HDFC Bank, 1528, 0.3% higher. Infosys, 0.5% lower, 432. Let's look at Lever and ITC. These are stocks of interest. 0.3% higher on ITC, 442.35. TCS, 0.3% higher, 35.50. And Hindustan Unilever flat at 2456. Let's immediately shift focus to the F&O counters. There is a 9% cut on Naveen Fluorine. This is the top loser, 39.63 on the F&O, and the top traded counter as well. MCX down 5%, 1981. Aurobindo Pharma up 5%, 921. Then let's look at Cholafin, 0.5% higher, 1225. PNB in the green, 1% higher, 8040. ICICI Bank 0.5% higher, 947. Bajaj Finance in the green, and BHEL 1.5% higher as far as prices are concerned at 128. Let's look at super high beta stocks that define the broader market. Canfin Homes 1% higher, 755. India Cement 3.5% higher. Remember, Vaishali had pointed out that money will move into cement, 422.80. Manappuram Finance 0.8% higher, 149.60. Vaishali, coming to you, how do you see the opening? Nifty now up 56 at 19,581. And what would you do?
Well, I'll still wait. Let's wait for 10-15 minutes and then take a trade because let it just settle down. But yes, I would say as long as 19,450 is held on, I think the bounce back cannot be ruled out.
Okay. Vaishali, your thoughts on Oro Pharma, top gainer in the F&O space now, 5% higher, very well pointed out by Shail right there. Your thoughts on this one now, Oro Pharma, what should one do after this initial tick?
I would say that yes, the stock will, because it's a gap up opening. Let's keep today's low as stop loss. And I think it can go higher, as I mentioned, towards 1,000, 1,020, 1,040.
Right. It is a metals day, Shail, like you were saying. Hindalco is the top gainer on the Nifty basket, 2.2% higher. Even in the F&O space, we are looking at Steel Authority of India, 2.5% higher. Nalco up by about 1% or 2. We are seeing Hindustan Copper also up in trade. Jindal Steel and Power up in trade as well. Vedanta now recovering about 1.5% higher in trade. And the Nifty Metals is the top sectoral index as well. Vaishali, your thoughts on this entire metal move that we are seeing today? Which would be your top pick for today?
Well, so I would start with Jindal Steel and Power and JSW Steel. Jindal Steel and Power has been outperforming comparatively, and right now also it's taken a support, so it makes a favorable risk reward ratio. I mean, 680 would be the stop loss, and I would look at a target of 720.
Okay, and what would you say on say Hindalco?
Hindalco, well, I'm looking at a target of 520, but it would be a positional trade.
Fair point. Sakshi, let's look at the broader markets. It's still early minutes, just 4 minutes into trade. And you've rightly pointed out, metals is the top gainer, 1.2% higher, 67.91. Let's look at the broader markets. Advanced decline ratio is fairly strong on the NSE. 1250 stocks in the green, 464 in the red. How about the NSE 500? Okay, the NSE 500 has an advanced decline ratio of 330s to 150. That's very strong. Remember, as I had pointed out, a lot of NAV massaging will also happen today, it being the last working day of the half year, the quarter, as well as the month. So a lot of fund managers would want a very green tick there. Now the outperformers, I would imagine NTPC 244.55, lots of block deals happening here. RECL, so it's power and metals that are clicking very well. And of course, Pharma. So remember, Pharma is a defensive counter, and till the time the PCR fires the chart of Lupin, I'll tell you how the stocks are positioned. As far as the pharma space is concerned, it's a complete green here. We've discussed Oro. Vaishali, your view on Lupin, 1145.
Well, so Lupin also is holding on with an upward move, and I think
Vaishali, yes.
Yes, so I would say this is also likely.
Please go ahead, ma'am.
Yes, it can go towards 1165 to start with.
Okay. Vaishali, I'll take your view on Eris Life Sciences as well. From the Nifty 500, since we are discussing the pharma space, the stock is up 6.5%. Your thoughts on this one?
Well, so this stock too is doing well, and it has given a weekly chart breakout also. So I would say continue holding with 800 as your support, and look for a target of 900, 910.
It's already at, I think, 885, right? 910 is what you're saying now on the stock.
Yes.
Okay, got that. Right, PSU banks, the other space that is buzzing in trade after metals, it's the second top sectoral mover. Vaishali, you pointed out on CSB's bank, and we're seeing a lot of other banks as well pull up in trade. Bank of India up 2.2%. We're also seeing Indian Bank, UCO Bank, Central Bank of India pull up in trade, almost 2% higher for all of these. Do you think the momentum will continue on this entire, second run PSU banking space? Any other pick apart from CSB that you'd like to highlight now?
So, well, of course, I would start with SBI. SBI also has been hardly been moving, but I think it's a very steady and a sturdy stock. So I would look at State Bank of India, and Punjab National Bank is still a hold for me, because I'm looking at a target. It would be, of course, a positional and a long-term trade. I would be looking at a target of 110, 120 in Punjab National Bank. And like you said, Bank of India can be still be bought, because that looks positive and good, ready for a good run up.
Right.
PIT. The chart will come in front of you, and I'm sure Vaishali is also looking at it. Very strong traction. 4 days of gains, and 4 days of gains, and of course the all-time high is 1217. It's a volume-led rally. Vaishali, would you like to comment on the structural strength of KPIT on your charts?
Well, so KPIT is one of the most favorite stock in the IT sector, and I think it has come out of its consolidation and a little bit of corrective move. I think in all likelihood it is ready for a retesting the previous high of 1220 levels.
Okay. We are welcoming Mayuresh Joshi, the head of research at Market Smith India, a very dear friend, and of course a phenomenal watcher of markets in the long and the short term as well. Welcome, Mayuresh. I think we did not decide to wear the same color.
Yes,
but,
I was just looking at that.
That's how it is. And I had decided, आज Friday है, And given the strength of selling by your friends, 3364 crores on the foreign institutional side, Mayuresh, I was thinking it will be a nice day. Nifty will open gap down and then we all will relax because it will consolidate at that level. But it was not to be. We still have 46 points on the green, 19,562. Are your friends on the domestic side massaging their NAVs? What are they doing?
Mayuresh, could you please unmute yourself?
Unmuted.
Okay, great. Now we can hear you.
So morning, Shail sir. Morning, Sakshi. Always a pleasure to be on your show. Yeah, nothing intentional in terms of the color, Shail sir, but I thought let's make a sandwich with some ketchup. So I think I put up a ketchup color. So, having said that, I think the resilience for the Indian economy compared to the globe continues. And that is why the sheer outperformance that we probably got for the broader market persists. A lot of data points are suggesting that there is a credit event coming. So if you look at the US bond yields as an example, you look at the mortgage rates, the delinquencies on credit cards, the housing prices in Canada, the stickiness of inflation in the Eurozone, stickiness of inflation in the Korean and the Indonesian economies as well. I think India probably stays a little bit better off. I'm not even adding the China angle completely here because that kind of mess that the real estate is in does not give confidence to a lot of foreign institutional investors. And therefore, I think domestic SIPs continue. Domestic institutional investors are probably looking at buying selective pockets in every fall that we're getting into the markets. And even on the FI side, as we speak, a lot of these global institutions, they are not overly bearish on India. I think it's just some structural modifications that they are doing on the portfolio in some sectors. But the outperformance for India probably continues.
Okay. Very good morning to you, Mayuresh. Great to have you with us always. And, I have that pink rubber band with me and a pink lipstick to match up with your pink colors and to support the market and enthuse the markets from the extreme caution that we were discussing for the first 45 minutes of our edition today. But, in a wild guess, leave alone all the 4 or 5 negative catalysts that we are talking about, the treasury yields, the dollar index, the crude oil prices, Fed hawkish tone, all of it. Historically speaking, October has been a good month for the Nifty. 9 out of the 10 times in the last 10 years, it has actually given an average return of 2.9%. Do you think the Nifty is going to get into this October fest this time around? Mayuresh? All right, I think we'll get back to Mayuresh on that front, but looks good on the screen right now, holding steady 19,558 odd levels on the Nifty right now. And Shail, again, it's NTPC that's topping the charts today. Hindalco, 2.2% higher.
Yes.
It's again power, steel, oil and gas space again, ONGC up in trade, UPL up in trade as well. And the pharma pack, Divis Labs, Dr. Reddy's, Oro Pharma that we've been discussing all through right here in today's trade. So it's not too bad a start. The big question is, will it sustain the momentum towards the end of the session as well? Okay, I guess we have Mayuresh back on the screen. Mayuresh, I don't know how much of my question did you hear last. I just wanted to ask your opinion. Historically speaking, Nifty has done good, in the month of October. In last 9 out of the 10 years that we have seen, giving an average return of about 2.5-3 odd %. Your thoughts for this month?
Oh, absolutely, and that's been the historical trend, Sakshi. Very good morning to you as well. What probably coincides with the sheer outperformance is the beginning of the festivities. And as the festive season kicks off in the month of October, a lot of discretionary spending comes across categories. So it's repainting demand as an example, spending on apparel as an example. And that probably boosts to a certain extent the entire GDP forecast that we've probably got for Q3. The GDP estimates for Q3 apparently by RBI is also one of the highest as we speak. And therefore, I think from an earnings perspective, when a lot of corporates are involved, the earnings trajectory from a Q3 perspective, and which rolls over also some parts to Q2, should be relatively better. Yeah. So I think historically, I think it's been a good move, the October series. I hope it continues this time around.
Yes, we all live in eternal hope, and it is the optimists that do greater and bigger and better things in life. And I'm very sure about me. I'm certain about Mayuresh as well. We are long term bull market enthusiasts, and it's panning out really well, at least for the markets. This is the fifth or the sixth month in a row that you are going to see a green tick. Sakshi and Mayuresh, I'll just take time to mark stocks that are at fresh all-time highs or 52-week highs. So RECL, a record high 285.86, 1.7% higher. We have L&T, we've discussed this ad nauseum, 3036, 1% higher, fresh record high, and this is the third successive day of a very strong rally that I see in front of me. NTPC, 52-week high, 246.50, a 4% uptick, and of course Aurobindo Pharma, the highest beta counter that I have ever seen in my life, which gives a lot of sleepless nights to long-term shareholders in the company, at 919, up 5% today. Vaishali mentioned that it's heading towards 1040 on the charts. This is the state of play as far as markets are concerned. The first 15 minutes are over, Sakshi, and the first 15-minute candle on the Nifty is a green candle, 35 points higher, 19,560. The Bank Nifty 44,390, up 87. Remember, the pain is in IT. The index is down 233 points, 31,649. These are frontline stocks only. Midcap IT is on a tier, including KPIT, which we've discussed so far. Public sector banks, again in the limelight. Union Bank, a monthly high, weekly high, daily high, 104.90, up about 2.2%. So the broader markets seem to be in fine shape, and Nifty is slipping just a bit. Remember, we had opened with a 60-point gap up, which is now just 40. So the sell on rise is a strategy that's working pretty well for the Nifty for the moment, at least. Mayuresh, your views on the broader market as of now?
So being very, very selective, Shail sir, I think what we are probably seeing is how earnings will probably play out is going to be extremely critical for the broader markets. A lot of companies have shown sustainable price action, and valuations are nowhere in the comfort zone for a lot of sectors at play. And therefore, where earnings might probably hold up is where the stocks might probably show signs of stability and some signs of price action as we move ahead in Q3 and Q4. So a larger take is being a little bit more selective as far as the broader markets are concerned.
Right. Okay, Mayuresh, let's discuss with you a lot of pharma names that are picking up pace. Two stocks where I will ask your view. Last week, I remember you picked out Oro Pharma as your preferred pick in the pharma space. It's in action today, 5% higher. From the Nifty 500 basket, we're also looking at Eris Life Sciences that I also asked Vaishali about, and she had about a 9-10 target, which is now approaching 6.5% higher on Eris Life Sciences as well. Huge volumes for this one. How would you approach these two particular stocks?
So remain positive on Aurobindo Pharma. I think the kind of transitionary phase that the company is going through, they had a lot of issues as far as the FDA was concerned, so on and so forth. But I think a lot of resolutions are happening at that front. And with the expectations of more complex launches expected from their kitty over the next few quarters, the margin profile should sustainably remain stronger as we head into the next financial year. So anybody holding Oro Pharma should definitely hold this stock. Out of the broader markets, as far as the pharma index is concerned, or the pharma sector is concerned, Syngene is something that we also probably have on our watch lists. A very strong performance that the company has posted in the quarter gone by. The expectations in both the CDM and the CRM business expected to continue doing well as far as earnings delivery is concerned, with the additions of more clients, the expectations in terms of the Malaysian facility coming back full stream, through regulatory approvals coming back on track, and with the kind of additions that they've probably got, both in terms of intellectual property rights, in terms of patents, as well as the strong talent pool that they probably have. that probably entices a lot of interest as far as a lot of innovators are concerned, which is also very high margin business. I think anybody continuing to hold on to Syngene can definitely also do that.
Okay, very huge volume monthly chart and definitely suggests that it's a record high for the stock. It is life sciences again, and let's also talk about the volumes over here. At a 5 times the volumes of the last 5 days average, the shares that have been traded are over 4,46,000 already on this stock right here. We'll continue to monitor this stock as we go forward from here. But another space, I wanted to take your view on, Mayuresh, and that is the metals pack, the other space that is buzzing in trade today. Do you think you'd take a bet on any of the stocks right here, given the macro context that we are in?
So again, I think the whole perspective for the sector is how much of a stimulus will China probably announce, and that is what the markets are waiting for. But you look at the other side of the coin, you're probably seeing domestic demand remain extremely strong. And therefore, if you divide the space into the ferrous and non-ferrous players, for non-ferrous players, copper prices are at an all-time low. You're probably looking at aluminum prices declining as we speak, and it's a testimony in terms of expectations of global demand remaining extremely strong, extremely weak over the next few quarters, assuming soft landing and recessionary conditions both in the US and the European zone. Having said that, for this quarter, the ferrous companies, Sakshi, can report a reasonable set of numbers. Domestic demand has remained extremely strong. The expectations in terms of HRC and rebar prices are actually up 5 and 10% as we speak. Yes, input costs have started inching higher, which means coking coal prices, iron ore prices, as we speak, are gradually moving northwards, which might put some element of pressure as we head into Q3, Q4. But the element of pass through will ensure that margins get protected. And because demand stays extremely strong, a lot of infrastructure projects, as an example, before the general elections, will have a very speedy completion, which means domestic traction will continue for a lot of these players, ensuring the margin stability and earnings output coming for the next 2 to 3 quarters, to say the least. As China recovers in the next financial year, the obvious reaction that you'll probably see in terms of demand supply dynamics coming back and a recovery in terms of LNE prices should start aiding pricing action as far as the overall value concern is mandated. Therefore, I think ferrous companies like JSW Steel, JSPL probably looks best placed in terms of both their margin profile, expectations of earnings delivery, and the deleveraging of balance sheet. So I think a couple of these stocks with domestic focus can definitely be kept on.
Right. Sakshi, another sector that's coming up in trade is the real estate play. Some traction in the index as well. Let me just mark the index in front of you. Yes, 1% higher on the Nifty Realty Index, 575. And one thing I'd like to discuss with Mayuresh is DLF. I think while not, at least I won't say anything about the company on the fundamental side, but the charts look very, very aggressive on the long side, at least to me. The price that you see, Sakshi, on DLF now is the highest since August of 2008. So that means we are at a 15-year high. And for people with a slightly longer term memory, this is also the IPO price of DLF, somewhere like 550. Mayuresh, what do you think is happening on DLF?
So two parts, Shail, to answer your question. One, I think the kind of new launches that DLF is doing and the lapping up that is probably happening for all its new launches is something that the street is highly enthused about. The other element that was plaguing the sector in DLF in particular was the oversupply that we've probably seen in the Delhi NCR region. With the kind of ramp up that we've probably seen in new launches, the ramp up that we've probably seen in terms of depletion of inventory on the residential units that they probably have, and a recovery in terms of average selling price per unit, the dynamics are definitely changing as far as the residential portfolio is concerned. Obviously, what it does and abets the balance sheet is a strong deleveraging component as cash flows start coming in. very strongly, both from the new sales velocity and the expectations in terms of liquidity getting generated because of inventory liquidation. The deleveraging on the balance sheet is happening on a fast track basis. At the annuity side of the business, that is also picking up steam. And as a lot of renegotiations are happening at a very good rate, along with fit outs at their proposed annuity and commercial hubs that they're probably establishing, even the annuity side of the business should be holding up pretty well for DLF. So I think a lot of factors, Shells, are working in favor of DLF, which is probably getting indicated in the price also.
Okay. Mayuresh, let me draw your attention to the IT names as well again, because the index, like Shail pointed out, is the worst performing today. The only index right now with a percent loss. Rest of the indices are still holding up. This is after yesterday's 1.5-2% loss that we had seen, and the brokerage houses reports that are now indicating at some neutralization in their stance, and the cut in target prices that they have done. Nomura has come out with a report on LTTS, the target price 4,300. Tech Mahindra, they have a 1,010 target. On Birla Soft, 530 target, and of course the news flow which is emerging from the Accenture guidance for FY24. We're just about like a week, 10 days away from the earnings picture to start. How would you advise investors to approach the IT names now?
So again, I think sentiments dampened because of what Accenture has probably delivered, Sakshi, yesterday evening. A lot of companies in the Indian IT landscape mirror what Accenture does in terms of their outsourcing model, and therefore the reaction that you're probably seeing on a lot of these IT stocks. Now, if you probably look at the divergent trends, large cap IT has underperformed, mid cap IT has significantly outperformed for two key reasons. One, I think the size of orders that mid cap IT companies win and execute are anywhere between $1 million to $10 billion. So those orders are still continuing within the larger landscape of BFSI, retail, manufacturing. We've seen a few large orders come through HCL Techway, Infosys, TCS. But to a certain extent, what the management commentary indicated, they should be gestated as far as their annualized guidance is concerned. And therefore, I think any impending slowdown might mean that order wins should start taking a back seat or probably start getting deferred. And if there is any changes in these huge orders in terms of pricing, that definitely has an impact in terms of the forward-looking revenue guidance. That is the fear for large cap IT companies that the street probably has, and therefore the sheer underperformance, even if valuations look a tad bit attractive at this juncture. For midcap, the outperformance continues because a lot of management commentaries indicated pricing action has not got impacted, order wins still continue, execution happening at a very good pace, and a large part of increments, specifically in terms of wage costs and outsourcing elements, are largely embedded in terms of the EBIT margins. Valuations through the roof for most stocks within this sector, within this space, as far as mid-cap IT is concerned, and therefore pullbacks mandated. The only mantra here will be, let's wait for numbers to start flowing in, what the managements are saying for the large cap companies, and how the landscape is probably looking. So no need to rush in, just a matter of a few days or a week's time before numbers come in, and then let's take a call on the sectors.
All right.
Fair point. Mayuresh, a couple of questions on the frontline Nifty. We'll be soon entering the stage of quarterly numbers. What does the Nifty EPS look to you for the first half year of this particular fiscal? And where do you think money is going to move in post the correction?
So two aspects, Shail sir, here. If you probably look at the Nifty earnings, and if I look at the export portion in the Nifty earnings, so some part of, a large part of Tata Motors as an example, some part of Tata Steel, around 27 to 28% is largely dominated in terms of global exports earnings trajectory. And therefore, any impending slowdown would probably mean that almost 27% or one-fourth of Nifty earnings might just shave off a bit in terms of the earnings profile that we've got for the second half of this financial year. And therefore, if you probably look at the domestic-oriented sectors, they should still continue doing well, in my opinion. Two things here. I think the expectations in terms of the consensus EPS for FY25, if you roll over 1 year down the line, is anywhere around 1,025, 1,050 odd rupees for Nifty. An average multiple of 19 times will probably mean that the fair value for Nifty will be around 19,500 odd levels, where we probably are as we speak. And therefore, which sectors, if you ask me, and as you ask me, will probably lead out of the remaining non-export oriented sectors as far as Nifty is concerned? To a certain extent, my sense is capital goods will still continue because of the strong focus that the central government will probably have. You're probably also expected to look at hospital stroke pharma as a space continuing to do well. And the larger discretionary trends in terms of how the broader markets might be expected to perform. A tad bit in terms of IT, if numbers probably remain supportive, let's see how numbers are, might probably provide support to the overall earnings trajectory. But in a nutshell, I think capital goods, hospital stroke, pharma.
Okay, and before we thank Mayuresh, I'd like to show you the monthly chart of DLF. The reason why, probably in the medium to long term, you'll see better prices on the chart is right in front of you. It's a very nice cup formation, and the monthly chart shows you that the prices that you see now were the ones that were seen somewhere in 2008 of August, and of course there is a split involved in the stock price, and if you push a little to the left, you'll see that this was the IPO price or somewhere thereabouts. Of course, a readjusted IPO price is what I'm talking about on DLF. So these are longer term charts which talk to you when you look at how the trajectory of the underlying business has been. Real estate is on a tear. You see DLF reporting 7,000, 8,000 flats in Gurgaon being sold in less than 2 or 3 days, and that is getting reflected on the stock price. We get really agitated and animated on daily price movements, but on monthly charts you see where deep money is moving into sectors, and perhaps real estate and DLF is one of them. Thank you, Mayuresh. What a lovely day to have you, and we'll again touch base. But for the moment, it's. Would you like to comment on the monthly chart of DLF?
Yes, as you said, Shail, I think they had gone through a lot of issues a few years back. But if you probably look at the trajectory right now, I think they're executing in the right direction. Their launches are getting very well accepted. Deleveraging is happening on their balance sheet. Annuity business is picking up pretty well and is expected to do so. And the residential part of the business, they're being very selective, Shail, in terms of launches in few key areas. Are getting very well accepted. So to that bit, I think, yes, the monthly chart is indicating that if you have a longer term horizon, quality stocks will continue doing well. And just to add to the point before we end the conversation on the optimism part, William O'Neill has a very nice quote on the optimistic part. His quote goes as this, that I've never met a successful pessimist.
Okay, many thanks, Mayuresh, for being with us. Always a pleasure speaking to you, and we will continue to chat more about the markets next week as well. But right now, let's shift focus to our corporate radar section. The company on our radar today is Shyam Metalics and Energy, and the company's top management is joining us as well. Sridhar Agarwal, the director of the firm, is joining us. Remember, the company is engaged in the business of steel manufacturing and energy generation. The company produces a range of steel products, including long steel, flat steel products. It also generates power through its captive power plants, and recently it's now forayed into the energy storage sector by announcing the launch of battery grade aluminum that's required in the manufacturing of lithium ion batteries. Very good morning to you, Mr. Agarwal, and thank you so much for taking the time out for this discussion on Business Today TV. Sakshi this side, and with me is my colleague Shail as well. Let me begin by first understanding from you about this new announcement that you have made. How big an opportunity is it going to be by way of accelerating growth in your top line, and by when do you think it will start to reflect on your books as well?
Good morning, Sakshi and Sailesh. Thank you for having me on the show. 2 years back, we set up an aluminum foil rolling facility with the motive of catering to the flexible packaging needs of the country. However, recently, after much R&D, we have been able to develop battery-grade aluminum foil in our plant. This is a raw material, it's a critical raw material that goes into the cathode connector of any lithium-ion cell, be it LFP or NMC cells. We believe that looking at the current growth in the EV sector, boosted by the PLI scheme of the Honorable Prime Minister, there would be a ramp up demand, which we would see starting 24, fiscal year 24 onwards, up to 2030. We believe that owing to the PLI scheme, there is almost more than 50 gigawatt capacity that has been announced, and this is coming up very quickly due to the time frame that has been put on the scheme. The scheme also mandates the battery manufacturers to procure almost 70% of the component going into the battery locally. Now, Shyam Metallic being one of the first companies in India to have established quality battery foil, we would definitely be at the forefront of this developing demand situation. So yes, I think the future looks optimistic, and it's a developing market. We look forward to see how the entire demand looks.
Mr. Agarwal, welcome to BTTV and of course to Market today. You've been a fantastic performer on the markets. The IPO was somewhere like in June of 2021 and priced at something like 306 rupees per share at the moment in the green. Let's talk about your main business at the moment. You are in the business of course, forging and a lot of other things related to metals. So how is demand placed? A lot of your companies in the peer group are doing fantastically well, given the demand that's coming from the auto space. How do you see the existing business, and what is the guidance that you can share with us for the next 18 months or so? How much of capacity is coming online?
Right. No, so we have implemented almost all the additional capacities that were promised during the IPO phase, and that has shown a drastic volume ramp up on our side. As the monsoon quarter comes to an end, we see robust demand coming up October onwards. The last two fiscal quarters should remain robust on the demand side. Being present on the long steel value chain and catering to the construction needs of the country, we are looking at a drastic increase in the construction activity that will take up October onwards. And we believe that our revenue and EBITDA numbers should remain solid, and we should be able to perform better than what we have in the last 2 quarters.
Mr. Agarwal,
fair point. Sticking to your...
Please, Shail, continue.
Yes, Sakshi, just a moment, please. Sticking to the current business, the end of March 2022 showed a profit of about 1724 crores, and at the moment we see somewhere like 800 crores on trailing 12-month basis, actually 680 crore rupees. Why is there a dichotomy?
Right. So, if you compare the fiscal year 22 to 23, there has been a correction, a drastic correction in steel prices. If you look at the first 2 quarters, there was also, high value inventory that we were carrying through the quarters, most of which we have used now, and the entire raw material base has now stabilized to reflect the market oriented prices. So we should be looking at a more optimistic figure going ahead. Also, there is additional capacity that has been commissioned in these last 2 quarters, including a power plant, a captive power plant, which we have commissioned at our unit in West Bengal. This would enable us to be power self-sufficient to a tune of more than 80%. So all these things would be reflective in the next 2 quarters, and we hope to see better results.
Right. What are your power costs at the moment, and how much of a margin improvement will you see when the entire power plant comes on stream? What's the capacity installed in power?
Right. So overall, our group capacity would be touching around 400 megawatt as of now, and we have commissioned additional 90 megawatt, which has happened last quarter itself. Right. Most of our power cost we are able to control as we are generating power through the waste heat recovery technology. This is from the waste heat that we are generating from our DRI plants. In most cases, our power cost waivers are below 3 rupees. So that is extremely competitive as compared to grid power and rest of the industry. And we look to see these gains in the next quarter.
Okay. I wanted a bit of your view on the capacity additions that you may be planning while you are foraying into this new business of yours. Would you need to add, capacities at this current level? What would be the expansion plans be like? And would you also need to raise any funds? You earlier have diluted a bit of stake via QIP. Would you be looking at further raise of funds to fund these additional capacities if planned?
Right. So most of our additional capacity would be funded from internal accruals. That has been the policy of the group. Other than that, most of our projects that are currently ongoing are, stipulated to come up well within the designated time frame, and they mostly cater to the existing value chain in which we are present. So either we are backward integrating or we are forward integrating to consolidate our value chain. We have increased our finished steel capacity drastically, and this has increased now to more than 2 million tons, which earlier 3 years back was only 1 million tons, and it's contributing more than 40% of our revenues. So this would be the mantra of the group going ahead, and we hope to see a more, a better performance going ahead on the same.
Okay, Mr. Agarwal, one quick question on your promoter shareholding. What is it at after the recent dilution via QIP and OFS? And by when do you see it coming to the norms of SEBI by 75%? When do we see that happening? And any other inorganic opportunities also planned in the future quarters?
Right. So we have recently, diluted more than, I think, 7.5% of the promoter stake, and that has majorly been through the OFS process. However, we would see a further dilution in the same range. This would come within the next 6 months as per the mandate by SEBI.
Right. Mr. Agarwal, would you like to comment on the broader business outlook that you're seeing in terms of demand emanating from the construction space? Why we ask this is that across, at least in southern India and parts of northern India, a slew of residential projects have been announced, and a lot of them are now coming up. How is the demand shaping up from the real estate space?
No, I think the demand shaping up from the real estate space is extremely robust, and it's going to be even better going ahead. Now that the monsoon quarter has come to an end, construction activity will be on full swing. We are also seeing a lot of demand coming up from IHB or individual home builders. Now, as the festive season approaches, there is a lot of demand that will come up from there. So the next 2 quarters should be robust, and we should be able to gain on higher EBITDA margins as compared to the monsoon quarters. Other than that, Shyam Metallic being a company catering to the long steel value chain, we are highly a construction-oriented sector. We are present in a construction-oriented sector. So we believe that, the next 2 quarters would be quite interesting for us, and let's see.
Okay.
Right. Mr. Agarwal, steel makers such as yours always operate on a very thin EBIT and net profit margin, it being a commodity business. Would you like to take us through the trends that you are observing in raw material prices, especially iron ore?
Sure. So, most of steel companies are currently operating on very thin margins. And looking at the nature of the industry, it's very important to be cost resilient. And I believe that over the last few years, we've been able to demonstrate how cost resilient we are as a company, and that has been reflected. That has been reflective of most of the numbers, most of the profitability, EBITDA margin numbers that are out there. We believe that when it comes to the commodity prices, us being present in the long steel value chain, making steel from the DRI route, we will remain largely unaffected by the shooting coking coal prices that has recently caught up with most players and has also contributed to increasing the steel prices. Where iron ore is concerned, we look at firming prices as compared to last quarter. In the current month, we are seeing the prices firming up, but also the demand as well as the prices on the finish steel have been quite supportive. Uh, Along with that, we have very strategic procurement initiatives. Being there in the value chain and being there running the plant on an end-to-end basis, where we are producing our own iron ore pellets and that is going down to the finished steel capacities, we see a lot of gains also coming in from the raw material prices, right? So while the prices are firming up, demand is supportive, and yes.
Okay, many thanks, Mr. Agrawal, for being with us then, and discussing with us all these insights about the business. All the best to you for the upcoming quarterly results as well, and we shall hope to catch up again to discuss more about the business outlook thereafter. Many thanks for being with us on this special edition. Markets doing pretty steady, 19,590 currently on the Nifty, 67 points higher in trade. And you can actually see most of the sectors buzzing in action, led by healthcare now. 1.1% higher in trade, and you can see a lot of names from the pharma pack up in the green. Dr. Reddy's, Divis Laboratories, Apollo Hospitals is now picking up pace on the Nifty, and PSU banks are higher in trade. The power space is leading the Nifty. NTPC up 3% now at 244 odd levels. You're also seeing the likes of Coal India inching higher. Metals pack we've already discussed. And the pharma space, even the broader markets, Eris Life Sciences and Oro Pharma, like we've discussed, these are the top stocks even in the F&O basket as well. With that, many thanks, Shail, for being with us on this special edition and discussing all these insights. And we shall continue to watch out for more market moves through the course of this trading session. So do stay tuned with us on the Business Today TV. Don't forget to subscribe to this channel, and also continue to engage with us on our other social media platforms. That's Facebook, Twitter, LinkedIn, and Instagram.
For millions of account holders with lockers in banks, it is their worst nightmare. Critical papers kept in a locker eaten away by termites. Except in this case, it was not papers but hard cash. Alka Pathak, a resident of Moradabad, visited a branch of the Bank of Baroda last October in preparation of her daughter's wedding. She deposited jewellery and 18 lakh rupees in cash in the locker. A few days ago, she was called to the bank for KYC verification and took the opportunity to reopen her locker. This is what she found. This is what remained of the 18 lakh rupees she had kept in the locker 11 months ago. But rules make it clear that the bank liability for the destroyed 18 lakh rupees is zero.
You have to explain to the income tax department from where you get the currency, whether it is a legitimate money, it's a hard-earned money, it has been declared in return of income or not. And if the money is not declared in your return of income, if it is not a money which is a declared money, then you might face some other problem in the Income Tax Act.
According to new locker rules put in place by RBI this year, customers can keep only legitimate items in the locker. The new rules prohibit storage of any cash or currency in lockers. Also on the banned item list are weapons, drugs, hazardous or radioactive substances, and even perishable items. The new rules specify that users can only use lockers for legitimate purposes such as storing jewelry or documents. Importantly, the rules allow banks to open the locker in the presence of the owner if they suspect otherwise. However, the termite terror has left many wondering what if the contents in the locker were critical documents and not just cash.
Bank may not be responsible for that because bank never knows what were the documents there. But there is a caveat in it and there is a rule in it that if there is a negligence from the bank side, of course you can file a suit against the bank for the negligence and for the damages and for the compensation.
The bank's liability in content loss cases, according to new rules, will be equivalent to 100 times the annual rent of the locker. It will also be liable to the customer for fire, theft, burglary, dacoity, building collapse, etc., as it cannot deny responsibility for any loss or damage to the contents of the lockers. The bank is also liable if there is damage due to fraud by an employee. But what is not liable for are losses or damages to the locker content due to floods, earthquakes and other natural calamities. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.
Fun and games are over for the Indian online real money gaming sector. Many believe the sun is setting on the industry even before it could rise. Having acted against crypto players in India, authorities are now targeting online the gaming sector. About 2 weeks ago, Dream11, one of the successful gaming startups valued at $8 billion, was slapped with a show cause notice of around 18,000 crore rupees by GST authorities claiming unpaid dues. Sources say this includes a tax demand of 6,000 crore and nearly 12,000 crore rupees in interest in penalty. Report says authorities are claiming taxes of 217 crore rupees against revenues of 228 crore in fiscal year 18 and taxes of 1006 crore rupees against revenue of 802 crore a year later. The company has approached Bombay High Court challenging the notices. Other companies issued notices include Gamescraft, which was asked to pay an additional 21,000 crore rupees, and Games 24/7, which has been asked to shell out 20,000 crore rupees. Report says another company, Head Digital Works, has received a tax notice of 5,000 crore rupees. According to legal experts, the authorities are filing retrospective claims based on the centre's new 28% GST on gaming, which comes into effect on the 1st of October. To many, the retrospective tax is reminiscent of the 19,000 crore rupee tax claim on Vodafone, which ultimately fell through. Tax experts believe that while recent GST amendments have clarified the tax position for online gaming going forward, the past position continues to be a matter of litigation. Online gaming companies are also waiting for the meeting of the Goods and Services Tax Council on the 7th of October to see if there will be any clarity for the basis of tax notices and future action by tax officials. While a formal agenda for the GST Council meeting is awaited, it is likely that it will review the process of implementing the 28% levy on online gaming, horse racing and casinos. Bureau Report, Business Today Television.
If you like the video, do like, comment, share and subscribe.
we are the curtain raiser of the Vibrant Gujarat Summit, and now I am joined by the Managing Director of Amul, Mr. Shail Mehta. Thank you, Mr. Mehta, for joining us. Vibrant Gujarat has a history. Amul also has a history with Gujarat. Born and brought up here. Tell us about the association that Amul enjoys with the Vibrant Gujarat, and what sort of investments the company has done to ensure sustainable growth.
Gujarat has seen a very vibrant growth over the last several decades thanks to this Vibrant Gujarat event. And to just put the perspective in numbers, in the year 2002-03, when this event started, GCF, the Gujarat Milk Marketing Federation, Amul brand turnover was about 2,400 crores. Today, GCF has grown 25 times in 20 years, and our balance sheet turnover is 55,000 crores, and Amul brand turnover is 72,000 crores, making it the largest FMCG brand in the country. So the growth of Gujarat, growth of Amul has been synonymous, and it is true, the credit goes to all the 3.6 million farmers across 18,600 villages of Gujarat, and primarily the women who have been driving this growth with potential and opportunity, and making us a formidable force in the country, and possibly a powerhouse or a dairy to the world.
So the Prime Minister also pointed out on the implementation of the policy. You have your farmers there, everything is good, but the MOUs are signed, but once not implemented, has no use of it, sir. So tell us about what new the state of Gujarat has done over the period of years, so that the policy implementation part, as a businessman, as an industrialist, what difference have you seen over the years?
We are actually seeing the walking of the talk. Because we are in every village of Gujarat. We have districts and unions and the dairy plants in every district of the state. And the expansion plan, the rapid increase in milk from just 3-4 million litres a day to now 30 million litres a day is all happened right in front of our eyes. And with the team, both from the government, the policy makers, the ministries, and of course our management team, all have contributed to this growth. And it's not that one person is responsible, it's the entire collective enterprise driven by a large number of people making this possible.
Does Amul still participate at Vibrant Gujarat Summits, and do you still sign MOUs with the government? And if yes, what all is the new phase that Amul would get into with the Gujarat government?
You see, Amul has been a part of the Gujarat growth story, and of course we continue our association with every single Vibrant Gujarati event. This year also we'll be participating in a big way. We have been investing big time in Gujarat. So a new dairy plant of more than 2 million litres capacity is being put up at Rajkot. We're going to sign an MOU worth more than 2,000 crore rupees only for that plant, handling 2 million litres a day. Plus many other projects are there in the pipeline. Our initiatives in the organic space, our initiatives in the development of variety of products in every district of the state. All this is a part of the event. And we
last question before I let you go. Now if I move beyond Vibrant Gujarat Summit, sir, what can you highlight one or two aspects where Amul is now focusing on, be it nationally or be it domestic in the state of Gujarat? Any 2 to 3 pointers of expansion or new that's coming up at Amul, especially in the festive season?
Yes, this is the best time of the year as far as the business is concerned. We are entering the festive phase. We are expanding big time, and as we discussed earlier, it's in the space of mithai, where we are going to get good quality products in the entire mithai range, not only in Gujarat but across the country. We are expanding the range of protein based products with the launch of new roast lassi, high protein low lassi, high protein yogurt, high protein milk powder, high protein powder, as much as high protein milkshakes. So a big range is coming up in this. We already converted our entire buttermilk into probiotics, making us the largest probiotic brand in the world. We are expanding the range of organic products with launch of another about 15 products, so about total 25 organic products available right now, and that's going to be a driver. So the growth in dairy, the Amul Doodh Pita India, of course, the expansion in ice creams, and the expansion in the entire variety of dairy products is already underway, and we are seeing very good growth in the business, growth in the milk procurement, and overall prosperity of the farmers.
Also, I'd like to ask you, with the festive season ongoing, what percentage of growth are you seeing and numbers in sales are you seeing for Amul and the overall FMCG space?
The growth has been in double digit so far in the first 5 months of the year. That's going to accelerate, and this is a peak season for milk procurement also. So it is an all-round growth and improvement in the business environment, business process, expansion in distribution network, expansion in the product range, and it's a momentum which we continue to grow, build, and on and on.
All right, Mr. Mehta, thank you so much for joining us. Wishing you all the best.
If you like the video, do like, comment, share and subscribe.
Good afternoon, ladies and gentlemen. Welcome to Business Today Television and to our special episode of Market Gurus, where we get you to meet professionals and experts who have a deep understanding of how financial markets work, not only in the long term, as also in the shorter term. We are joined today by Mr. Abhay Agarwal. He's the founder and fund manager of Piper Serica, a very well-known individual in the markets. Over the last 17 years, Mr. Agarwal has been offering portfolio management schemes under the Piper Serica Advisors Private Limited. And before Piper Serica founding that, he was with JP Morgan Partners in Singapore. Namaste Abhayji, what a pleasure to host you again on our special shows. This is as good a time as any to check a sentiment in the Lal Street at a time when global macro is deteriorating. How do you see the overall structure of the markets at the present moment when US Treasury yields are the worst since October 27 and the dollar is strengthening? How do you see that impacting our markets, sir?
Yeah, good afternoon, Shailji. First of all, pleasure to be on your show again and talk to you and your viewers. So thank you for calling me. Shailji, what you are asking is something that a lot of fund managers like us are grappling with, because while we do not want to be traders, but frankly, in my 30 years of investment journey, it is rarely that I have seen such a poor global construct on the financial side as we are seeing right now. And as you mentioned, the yields on the US Treasuries and as a result on the corporate bonds has gone up to a level where I don't think anybody expected, even 3 months back, nobody expected that the 10-year would be well over 4.5%, well over 4.6%, and the shorter term 2-year bonds will be at 5.5%. So I think some of these things that we are seeing have surprised us. And if you go back, and you did refer to the global financial crisis, and if you look at the genesis of that global crisis, again, was that the world was over-borrowed, it was over-leveraged. And as the rates went up even slightly, there were bankruptcies and there were hedge funds that folded over, well-known brands that fell off. I think the rates now are higher than that. And my fear is that there are potential bankruptcies, potential insolvencies that are lurking around the corner. But at the same time, what I see in terms of sentiment, there is no real fear. I think the markets have done very well, equity markets, especially risk markets, over the last 6 months, starting April 1. We have had very strong FPI flows, domestic flows that have boosted valuations, taken some of the sectors to extreme highs in mid-cap, small-cap space. So in India, I don't think there is any real fear right now. In fact, I'm still kind of surprised by the conversations where large funds are looking to deploy funds. And that tells me that any correction that comes in because of a bad event will be very sharp and will lead to very crowded exit, which will kind of further dovetail into a bigger correction. So I think all market participants at this point of time need to be very careful of a couple of things. That oil prices are going back to $100, which is not a good sign. You have a situation where geopolitical risks still sustain. You have a situation where equity markets are pricing in a lot of good things and upsides, no negative surprises. And you have interest rates which are continuing to go up, despite interventions.
Yes.
So that is my view, Shailji, of the global market construct right now.
Right. Abhijit, the good points that you mentioned, of course, the fact that Indian stocks as well as domestic sentiment doesn't seem to be reacting to how bad the global macro has turned out to be in the month of September is definitely a cause of worry and extreme caution, because we've seen the small cap and the mid cap indices rise about 26-27% from the month of April till about mid-September. And as you and I both know, corrections come fast, they come sudden, and they come unannounced. So that is the worry. Since you've seen the markets for so long, share with our viewers how Piper Serica is structured at the moment in terms of what you are doing in mid caps and small caps, and how are you sort of guiding your investors through this potential pain that is likely to hit Indian markets?
So Shailji, we have two funds. We have a PMS in India and we have a Mauritius-based fund called Piper Serica Numero Uno Fund, and they invest in the similar portfolio. We have a model portfolio that we manage. And what we have done is that since earlier this, about 10-15 days back, we have been booking profits and getting into cash. We are not redeploying right now. If you go back to March, LG, you would remember the participation in mid caps, small caps, are very